What does putting almost half of your 50 million VC fund to work in businesses active in the regen space in North America teach you about that space? What has changed since 2021, since you started raising? What big opportunities we haven't invested collectively in yet? What is missing and what is needed? And we discuss why Mark is no longer hunting for unicorns, but still very positive about the potential for financial and non-financial returns in regenerative food and ag space. This is the Investing in Regenerative Agriculture and Food podcast, Investing as if the planet mattered, where we talk to the pioneers in the regenerative food and agriculture space to learn more on how to put our money to work to regenerate soil, people, local communities, and ecosystems while making an appropriate and fair return. Why my focus on soil and regeneration? Because so many of the pressing issues we face today have their roots in how we treat our land and our sea, grow our food, what we eat, where and consume. And it's time that we as investors, big and small, and consumers start paying much more attention to the dirt/soil underneath our feet. To make it easy for fans to support our work, we launched our membership community, and so many of you have joined us as a member. Thank you. If our work created value for you, and if you have the means, and only if you have the means, consider joining us. Find out more on gumroad.com/investing-in-regen-ag. That is gumroad.com/investing-in-regen-ag, or find the link below. Welcome to another interview. Today a check-in interview with Mark Lewis, the managing partner of Trailhead Capital. Welcome, Mark.
Thank you, Koen. Pleasure to be back.
We talked last time, I checked it, in June 2021, which feels like a lifetime ago and only yesterday. So I'm very curious, obviously, for people that didn't listen to that, I will link it below. But for just to have a short intro, and what is Trailhead Capital and just where you stand now as we're recording this in the middle of 2024. And then we're going to go into all the lessons learned and all of that. But just a short, brief intro for the people that didn't listen to the previous interviews. Actually, we did quite a few around your team. So what is Trailhead Capital and who's Mark Lewis?
Yeah, you bet. So Trailhead, we are a early stage venture capital fund investing exclusively into seed and Series A regenerative food and ag technology companies. So you can think about us as kind of the overlap between climate tech and ag tech. And our first fund we're investing out of is $50 million. We've now made 27 investments. I think when we last spoke, we had made 3. So I've been making good progress on deploying Fund 1. Have one exit, company Vents, sold to Merck. And our thesis is that agriculture is uniquely suited to be a climate mitigation, adaptation, and resiliency tool for society. And it can simultaneously solve problems around carbon, biodiversity, water, human health, and rural livelihoods. So our thesis is that we need to reinvent how we feed, clothe, and shelter humanity relatively quickly to avoid the problems associated with those 5 items. And so we're betting on the innovators and disruptors and entrepreneurs using technology to scale regenerative outcomes on the land. And we think that'll provide nice, robust financial returns for our investors.
Yeah, and it's fascinating to see 3 years later, I think. So we have a lot to unpack in that. And we actually are co-investors in a few companies together with our syndicate. And actually, I was personally invested in Fence as well. So I had the same exit as you, which was interesting to go through that process. Definitely, and to see an exit in this space and maybe not the impact yet we want to see. I think it's being rolled out now, but at least seeing virtual fencing as an interesting sector has helped spur other companies and a lot of innovation. But looking back, you raised just shy of 50 million, which in the time was, you started in a different environment, I think, raising than you ended. But the thesis of VC in regeneration, I don't think was even a thesis or even a known thesis back then. How has that changed? Like, let's start with the investor mentality now. You're starting to prepare for fund two, as one does in the space if you're successful. And how is that different? Or how is the preparation now different, fund two compared to fund one, from the investor side?
Yeah, so we were fortunate to launch in 2021, which was a very robust venture environment. So but yeah, and then we didn't actually end up finishing the fundraise until 2023. Rockefeller Foundation was our final LP that joined and actually joined our LPAC as well. So it took
What
us
is
a
LPAC,
couple
just
of years to raise
for
the
people
50
not
million.
deep in the space?
Limited Partner Advisory Committee. So we have six of our larger investors that help represent the interests of the rest of our investors and guide us through some decisions that we need to make on behalf of the partnership. So 2024 is definitely a different environment, much harder to raise a first-time fund. So we're very grateful to have the track record we do. But 2024, 2025 vintage venture funds, by and large, should be quite a bit better than 2021, 22 vintage funds because valuations have come down. Discipline has returned to term sheets and due diligence.
What do you mean by that when you say discipline has returned? I mean, I have an idea because we had conversations about this. I was lucky to be helping one of your investors, I think, on their due diligence. And we were talking about discipline in those years prior, let's say, before 2022. But when you say discipline in investing, what does that mean?
So in the zero interest rate environment and with the Inflation Reduction Act, and there was just so much stimulus money during COVID. Money was just kind of sloshing around in the system, and there were many unicorns minted, and it turns out like 60% of them were minted by four very large venture and private equity funds, SoftBank, Tiger being a couple of them. So there was, literally deals being done in a matter of days, term sheets being written in hours, multiple competitive firms trying to get winning the deal. So it was just, and that led to valuations becoming, like multiples on revenue or EBITDA just grew to all-time highs. And so sanity has returned to the market. A bunch of the, kind of quote unquote tourist investors who were, saw the climate or regenerative ag was hot and sexy theme, they have sort of retreated and realized maybe they didn't know as much as they thought they did about the sector or the theme. So all of that, I think is actually great for us. We have remained. We are steadfast in our focus and our expertise and our niche and specialization in the market. So it's kind of nice to not have quite as much competition in terms of winning the best deals. And for us, our pitch to our investors is if you like this in 2021, you should really like us in 2025 because we're on the map now. We have 27 portfolio companies. We're better at sourcing, picking, winning, and servicing our companies than ever before. And 2025 is just going to be a better vintage by and large than 2021 because of the macroeconomic tailwinds.
I think you have to unpack that one as well. Sorry to do a bit of VC investing one-on-one, but when you say vintage, I think many people not in the space think about wine. When you say better vintage, it's the year where the fund was born, right, and starts. And you compare that with, like, you compare your Trailhead Fund 1 with other funds that started in 21, and you will compare Fund 2 with other funds that start in 25, if I'm correct.
So Cambridge Associates and PitchBook just announced their 2020. So they always report on how all of those vintage year funds are doing compared to their peers. So it's a metric called TVPI, or total value to paid in capital. And so we just discovered that we're top quartile for 2021 vintage North American early
All
stage
sectors,
venture
everything.
fund across all categories, industries.
That should help with fundraising.
That's right. So that's, we're very encouraged by that result. So the TVPI for 2025 vintage, my guess is that will be higher than the total TVPI for 2021, just across funds. There's a Stepstone is a group that does a lot of fund-to-fund investing, and they just came out with a piece talking about the power law in venture is really largely about vintage, and that you never know what's going to be the best vintage year, but that really is a large part of what drives investor returns in venture, is making sure that you're allocated into right. Yep, just getting the market cycle timed correctly. So,
which is fascinating, just on timing, just on the year.
For any investment, the most important thing is what's your cost basis.
And you want to start in a low one or in a low, because if valuations are low, if there's not a lot of competition, you can get into the best deals and for a good price, which is what drives your return as a fund.
And so if you deployed all your capital in 2021, 22, your cost basis is unfortunately pretty high in many cases. So we're top quartile. And the other thing that's really good for us is we still have half of our fund in dry powder. So we've only deployed.
Yeah, I was going to say, like, how much has been out of the door, let's say, and have you invested in 2021, 22 versus 23, 24, 25, etc.?
Yeah, so we really only made a handful of investments in 21 and 22, and then have made more of our investments in 23 and 24. And so,
was it because of limited dry powder at the time, which was sort of luck, or was it because of discipline?
I'll be completely honest with you here, Koen. It's a combination. I mean, we were disciplined, we were conservative. We saw that valuations were high and that competition was frothy, and we also were still raising our fund, and so we weren't sure if we were going to get to our $50 million target. So we made, in some instances, a little bit smaller check sizes, which now we have the benefit of being able to deploy more capital into some of those companies, in many cases at the same valuation from several years ago, and they have since made a lot of progress, increased, revenues, customers, market traction, etc. So it's I would say a combination of skill and luck, and just market timing. But yeah, we were conservative and remain so. I mean, it's still, I don't think we've seen the bottom of the market yet. Valuations are still coming down, and so we're still deploying in a very, we have a 4-year investment period. So the end of the investment period for Fund 1 is April of 2025, and we will stretch out all the way to the end of that. And then, the plan is that would be the first close for Fund 2 would be around that timing.
And does that mean, like, your investment period, like, do you keep anything for follow-on investments, or is that also included in the investment period?
Yeah, we're reserving almost half of the fund for follow-ons. So we've made 27 investments.
To double down,
we'll make 3 or so additional new investments in Fund 1. And then the remainder of the 50 million will be for double down, triple down, quadruple down on our winners. So we're starting to do that already. We have some companies that we invested in the seed round that are now raising A rounds, where we're gonna kind of back the truck up, so to speak. Because the name of the game in venture is you want to have 5, 10, 15% of your fund in your top performing investments, so that you have your highest ownership percentage in the companies that have the best outcomes. So that's what we're trying to do.
What will be fundamentally different, if anything, actually, in Fund 2? Like, are you going to do a land fund now, or sea-based? Like, what are your thoughts on Fund 2? Now you have proven a number of things in Fund 1.
Yeah, it's essentially rinse and repeat strategy. So we think we've kind of caught lightning in a bottle and found, for companies, they call it product market fit. For managers, they call it GP thesis fit. We think we've found GP thesis fit, where we've got the right team, the right deal flow, the right advisor network, for for our thesis and our strategy. So we'll probably try to size up to maybe 75 or 100 million, just so we can write slightly larger checks and increase our ownership percentage. We'll probably do more like 20 to 25 portfolio companies instead of 30. And then we have not been doing any CPG investing since we made the investment in Whiteleaf. We kind of have decided that that's a different return profile. So we're really focused. I focus, kind of exclusively upstream, on-farm, tech-enabled solutions that can scale regenerative practices and outcomes on the land. And then Pete Oberly, the other managing partner, focuses more downstream on supply chain, kind of outside the farm gate, supply chain optimization, so many like kind of software SaaS type of investments. So that'll be the focus for Fund 2, and we're excited to continue our progress. And we now have many entrepreneurs that new companies can call and say, what's it like working with Trailhead? And we think those will be positive references. So we think that to answer your other question, what else has changed is a lot of ag tech generalists have become more and more climate and regen focused, has been our observation. So several funds that are on Fund 2, 3, 4, that kind of started out as just kind of generalist ag tech folks are now more focused on regen and climate, which is terrific. So we think that's we were very delighted to be on the early side of that trend, and very glad that there are more entrepreneurs and more funds and more dollars flowing to those solutions.
And on the entrepreneur side of things, how has that shifted? How many more options do you have to choose from, or not? Maybe has the space has more talent coming to the space? Like, what's your observation from let's say the deployment side of things? But where do you put the money to work? What do you tell your investors compared to what you said maybe in 21, 20, etc., when you were fundraising for the first time? And it feels like a very different space in terms of regen.
Yeah, I would say in general, there are fewer deals happening now than in 2021, 22. But we still, plus or minus, we invest in less than 1% of the deals that we see. So we've seen several thousand opportunities, and we've made 27 investments. So we've just gotten better and better over time at thesis or strategy. That said, we still have a very robust pipeline. We have multiple deals in recognition, and more quickly dismissing opportunities that are not a fit for our right now, heading potentially towards investment committee. So are
you saying it's become less, or like you said, there are less investments in general because probably the general atmosphere, but in terms of companies that are raising or companies that want to raise in the regen space, I would imagine there would be more simply because the wave of regen is growing. But have you seen that as well?
Yeah, I think I saw recently some stats about like early stage venture across the board is down like 50 to 60% in terms of number of deals done. And I think in kind of our space, it's more like 12 to 15%. So climate and kind of where we play has been more resilient than the market writ large. We still have very healthy, robust deal flow, and it's super exciting, the number of brilliant entrepreneurs that have decided to dedicate their careers to this space. So we're not twiddling our thumbs, waiting around for opportunities to review. It's there's plenty of activity for us to consider.
I remember your thesis in the earlier interview we did was I think I titled it "Hunting for Unicorns in the Regen Space." Ever regen agriculture and food. and you made a very, I pushed back on what VC returns are possible in regeneration. Is that not inherently not possible because of, I think, the growth of an old grown forest is, I don't think, 3 to 6% or something like that. And you made a good case for, yeah, but we're in such a degraded state. We're definitely not in an old grown forest. So for a limited time, who knows how long that window is, we can have very interesting regeneration, and if you do it well, very interesting returns. What do you think of that thesis? I mean, you're obviously raising another VC fund, so you're still into that thesis, but how do you look back at that and now with 27 deals under your belt and many no's, what do you think about that?
It's funny. I'm actually looking at a drawing here on the table from my daughter of a unicorn. So there's lots of unicorns at our house. I honestly would probably back off of that a little bit. Just if you look at the data, there are not a lot of ag tech unicorns, and there might not be, and that might be okay. And so we're really underwriting now more for like $200, $300, $400, $500 million exits, which for us, we underwrite to a 10x return minimum is what we want to build a believable case for. So that's why we need to be so disciplined on our valuation as we enter the deal. So we need to enter deals at 10, 20, $30 million post money valuations so that we can have the potential for a 10x at a $200, $300, $400 million exit. So yeah, I'm definitely not ruling it out. There will be additional ag tech unicorns, and we will have a terrific outcome for our investors in our fund if we can find several exits in the several $100 million range. So, but I do stand by the fact that we have, if in fact we need to reinvent how we feed, clothe, and shelter humanity in a relatively quick time frame to solve problems around carbon, biodiversity, water, human health, rural livelihood, those are huge environmental and social problems that are going to require massively scaled companies and solutions, and that should lead to large exits. So
if it's $1 billion or more, is then sort of not irrelevant, but large enough. I think unicorn is always this mythical term,
right,
of a valuation above $1 billion, but maybe not so relevant in this case.
Exactly, and I think there are 1,400 privately held unicorns, and many people estimate that the vast majority of those will never have unicorn status. Again, like that, I've heard the term Zerpicorn, which is, in the zero interest rate environment, everyone thought that their company was worth $1 billion, and because they were raising in that frothy environment, raising hundreds of millions of dollars at $1 billion valuations, but their revenues might never catch up to that valuation. So yeah, I'm less focused on unicorns necessarily, and more focused on if we can build several $100 million outcomes, and more than likely these are, I'd be delighted if there was an IPO in our portfolio, but more than likely these are companies being acquired by the ag and food majors that are trying to become more regenerative through acquiring our portfolio companies. That'd be a great outcome for our investors and for the food supply chain more broadly.
Yeah, and there is some tension there, which I feel, full disclosure, I'm a small investor in the fund as well. Do you feel the tension there? Or I think definitely the interest, let's say, from the food and ag majors in regen has exploded in the last 3 years. I haven't seen a lot of acquisitions yet. And we also know that a lot of acquisitions, let's say, don't come to full fruition in terms of impact. What is your feeling there? Because some of the companies you are working with will head in that direction over the next years. How do you how do you try your best, of course, within your influence, that the impact will materialize at the large scale, which is what we need and how we started this interview?
Yeah, I think it's inevitable. I don't hear.
You mean
any
regen
or ag.
The impact?
Yeah, and the acquisition by the majors. I don't hear any big food or agriculture company publicly stating that we're going to continue business as usual. I mean, there are actually, like in the oil and gas industry, that's now coming back. I mean, Shell is now saying, actually, yeah, we're an oil and gas company, and that's how we make money, and we're good at it, and we're going to continue to do this. I mean, I don't hear Mars or Pepsi or JBS or any, Danone, General Mills, ADM, Cargill, like these groups are not, I don't hear any of them saying business as usual is working great.
Why is that? And why have we seen that in the renewable or in the, let's say, the energy space? Yes, maybe it's the same wave, everybody excited, and then reality hits in and starts dialing down the commitments and stuff? Or do you think something else is at play? Why would we take this more serious than we took the BP saying beyond petroleum at some point as well?
Well, I mean, a huge part of it is human health. I mean, climate is obviously a big focus, water, biodiversity, but a huge, huge piece of this is human health. And I mean, look at all the lawsuits that are piling up for Bayer related to Roundup. It's just, I think these companies are realizing, like, if you can attribute, diet related illnesses to their products, that's problematic for their business model. And we
is
now
that more than 3 years ago, that notion? I mean, in our bubble, definitely, but like, is that more a thing, the health part, compared to 2021?
I think so. I mean, obesity and diabetes and a bunch of these diet-related illnesses are continuing to get worse. Ozempic is an interesting development. But like, I mean, look at Andreessen Horowitz just led an investment of $53 million into functional
Mark
health.
Hyman, yeah.
Mark Hyman. So like I think more and more people
maybe
are starting to realize.
Maybe we should start a health company next to this podcast. That would be interesting. Yeah.
Food.
Now,
food
for people
as
a background, that Mark Hyman has a very successful podcast and also a successful company, and just raised from one of the best known, if not the best known, probably not, but anyway, in the select group of very well known tech VCs investing in a functional health company, which by all means is already interesting. I'll put some links in the show notes. Just read it and see how suddenly people in Silicon Valley start caring about health in a different way, let's say, than they did until now with superfoods and Soylent and things like that.
Yeah. And his whole thesis is that food is medicine, and that there's a healthcare crisis in the United States, and we have got to figure out how to do preventative healthcare and help keep people from developing these diseases that are diet related. And so, yeah, that's one of the things I think is different between the oil majors and the food majors, is that's there's an additional consideration for. I mean, it's kind of like the tobacco companies. Like, they said they didn't know. They said it was fine. It turns out it wasn't fine. I mean, it's the same thing. I mean, if your whole business model is predicated on selling high fructose corn syrup to children, that's causing childhood obesity and diabetes, I mean, that's sooner or later that game is up, I hope.
But then you could argue, yeah, is that like the same? And I think the energy transition, very few will be able to adapt. I mean, they might try by buying companies, which is good for the investors. But it's such an intricate part of selling ultra processed food is, I think, in some companies, 80 to 90% of what they sell. So that transition, that's going to be rough, let's say.
Yeah, I think it's going to be rough, and I think they're going to have to adapt and evolve, and acquiring some of our startups and a bunch of the other brilliant, innovative.
So are you back focusing at CPGs, or what would I?
No, I mean, that could be Cargill, that could be Louis Dreyfus, that could be the grain majors, that could be it could also be the food companies, the ingredient suppliers. I mean, up and down the entire food supply chain, I think will be affected by that trend.
And in your current portfolio, like, because we only discussed 3 last time, because there were only 3, now there are 27. What are some of the surprises? Let's say, I can say highlights, but for sure you mentioned them everywhere. But some of the surprises, things you really 3 years didn't even consider on your radar as a thing, let alone a company, let alone an investment.
Well, I just skimmed through our last interview this morning in preparation for this, and you and it was funny. I talked about the
Mm-hmm.
rhizosphere a few times and how we might learn more about that. So we invested shortly thereafter in a company called Funga that's doing just that. I mean, inoculating tree saplings with mycorrhizae to help optimize the nutrient flow between plant roots and the soil microbiome. And so that happened way more quickly than I thought it would. Another conversation you and I had was how great it would be if nutrient density were measurable and monetizable. And we mentioned Dan Kittredge in Bionutrient Association, and maybe that's Fund 2 5 years away before there's an investable opportunity there. We just invested in Audacious,
Shout out
led
to
by
Eric
Smith, one of your podcasts. Yeah. So he's building that solution now, which is super exciting, and so that's happening more quickly than you and I thought it might 3 years ago. AI is coming for food and agriculture. We just invested in a company called Avalo that's using large language models to do computational breeding for genetic trait selection in seeds. And so they are doing things, for example, like trying to figure out which genes could lead to more drought-resistant cotton. So a lot of the cotton that's planted in West Texas, for instance, is never harvested because it doesn't get enough water. So you could really optimize that whole system if you could figure out how to make cotton more drought-resistant. If you've heard David Friedberg talk about Ohalo, his new project from the All In podcast, this is the same guy from Climate Corp. He's figured out how to grow way bigger potatoes with the same or fewer resources. So those are the types of innovations that I think are happening even more quickly than I anticipated, and can help us feed more people good, nutritious diets in a time, hopefully in a less resource intensive and better human health outcomes sooner. So I'm generally feeling like the technology and the disruption in this space is happening even more quickly generally than I anticipated.
And what have you changed your mind about?
That's a good question.
Something that you thought was going to be real big, or no, I don't know, or something the other way, or something you thought would never invest in X and you ended up, or I don't know.
Yeah. Let's see. I mean, we invested in a company called Progenco that is doing some very innovative and interesting things in combining the beef and dairy supply chains. So they take embryos from Angus beef and they implant them into dairy cows. And so a dairy cow gives birth to a beef calf. And our thesis is that this can have drive major efficiencies in both the dairy and beef supply chains, because you can replace a certain number of cow-calf operations by using the dairy cow instead of a beef cow. And then in dairy, many of the calves are males, and they don't need most of the males, so it's a sad outcome for a lot of those male dairy calves, and they live short and brutal lives. So if you can replace that with a very high value male or female Angus beef calf, we think that's a huge win. So we think there's a way to basically replace a certain number of beef and dairy cows without sacrificing any volume of milk or beef. So that, it's a bit.
You didn't
more,
think you would be looking at that, yeah? No, I can imagine.
It's a bit more in the playing God category than I thought I would get comfortable with, but IVF humans are doing it. I think it's a technology that is here to stay, and it has massive potential animal welfare Think about, the amount of water you can save by not having to have that additional feed. Think about the methane. The methane emissions savings could be enormous from this type of solution. So, that's one that I didn't necessarily see coming.
And let's then play God on the other side a bit of apparently we're really good at predicting things, or at least you share what you're interested in and then you happen to make investments. What are you interested in that you haven't invested yet that might happen through this fund or through others, or things that you would love to see more of? Like, I would love to see companies operating in XYZ. If it's an investment for you or not, that's a side note. But just like, what are you missing in this space? What would you like to, for more talent? I get a lot of people that reach out, like, what should I do in this space? We have a great video course that can help you figure out a path in that. But at the end, like, what are neglected spaces that you would love to see more entrepreneurs globally biting their teeth in? I don't know if that's a sentence, but you know what I mean.
Yes. More food is medicine, generally. And then I'm still really bullish on carbon markets, and I feel like I'm one of the few. But I continue to be convinced that all these big publicly traded companies that made net zero pledges, the Securities and Exchange Commission in the United States is going to hold them accountable to that, because people bought and sold their stock based on that information. So Microsoft has the most aggressive net zero by 2030. That's 5.5 years away. And Microsoft's carbon footprint is growing substantially
because of AI,
because of generative AI. They're building their own electricity generating capacity just to drive their data centers for generative AI. So, I think they're going to be buying a lot more carbon removal credits, CDR, and a lot of that. My preference would be that it be nature-based over, direct air capture or these other, kind of geoengineered solutions. I think there are great ways. Funga is a great example. Ion with enhanced rock weathering is a phenomenal way to sequester gigatons of carbon in a more permanent fashion while providing agronomic benefit to the land and the land steward, and not requiring a major practice change. You can swap in this olivine rock dust for ag lime or limestone for pH balancing benefit, use the same equipment, and then also benefit from major, like, gigaton carbon removal potential. So I actually I went on LinkedIn and went on a little bit of a rant saying I think the only people that can kill the voluntary carbon market right now is not Republicans in Congress. It's not the big bad oil and gas companies or food companies. It's actually like the climate tech community, who seems to have lost faith in the voluntary carbon market. And I'm trying to be counter-cyclical and sort of contrarian, I guess, in that view, because I believe that it has to happen from a global, livable planet standpoint, but also just more practically these companies. And there's Frontier Climate, which is a big consortium of the tech majors, is still very active. There's a new group called Symbiosis that was just announced. So I think I'm bullish on carbon, and that's it's not necessarily where the majority of climate tech investors are at the moment.
And what is missing to deliver those billions or those gigatons? Like, what do you see? What's missing in the market to really deliver that?
Scalable supply chains. So Ion is working on how do we source enough rock, mill it, spread it on farms. For Funga, it's we just announced a big partnership with a big IFCO PRT. We're going to be inoculating their seedlings in their nurseries. So it's just a matter of getting those seedlings onto timber and forestry land with these real estate investment trusts or private landowners, and then getting the measurement, reporting, and verification protocols in place. So it's just, it's building out these new complicated supply chains that don't exist yet.
Yeah, so really about collecting, like finding the spaces, collecting, in this case, the olivine, grinding it, getting it into, it's a lot of implementation and rolling it out at scale, season after season. But we've done that before in many other things, like the oil and gas industry and other industries. Renewable energies are really good at running large-scale projects, so that doesn't seem like an impossible task, at least.
Absolutely not. I mean, yeah, and that's what's so exciting is that I think this space is where renewable energy was 10, 15, 20 years ago, or it's where oil and gas industry was in 1858 when they drilled the first, when they found oil in, I think it was Pennsylvania. This is that moment in CDR, in my view, and if you're a wildcatter in this space now, that's where I think the $1 billion outcomes can come from.
And do you see any risk of the Microsofts and others, like pedaling back on their commitments, or and because there's no way they're going to get their net zero without these? But as we've also seen with oil majors, they also are quite flexible in adjusting their commitments, let's say. What do you think the risk is there, especially with some political outcomes or potential political, or at least political turmoil we've seen in Europe and of course this year in the US? How do you think major companies will react to that, or will they just keep going in the background regardless of what's happening in Washington or in Brussels or Delhi?
I think they have to. I don't think the Securities and Exchange Commission cares if Donald Trump wins the election this year. I think they care about protecting widows and orphans who bought and sold stock based on public statements that these companies made. And so, I believe Google just announced that they're no longer claiming to be net zero because their generative AI footprint is expanding. And so they also said we're not going to do offsets anymore. We're going to try to decarbonize our supply chain, and we're going to buy CDR, carbon removal, that has really clear, it's taking carbon out of the atmosphere, not just, yes. So, they might have, and that's why Frontier and Symbiosis, that's why they have pooled money to create those groups. Like, it's a demand pull mechanism to say there does not currently exist anywhere near enough CDR for us to hit our targets. So we're trying to, they're putting out RFPs, they're creating a demand signal to the market to say, Ion, Funga, all these CDR companies, show us how you can build these supply chains and what the price would be for us to buy, millions and millions of tons of CDR from you. And I think they're motivated to do it. It's also a matter of attracting and retaining the best talent. The kids coming out of college, the software engineers, the people that are going to work at Microsoft, Meta, Alphabet, Salesforce. They care about climate, and they want to know that the company they're going to work for is part of the solution and not part of the problem. So it's not just shareholders; it's all of the stakeholders that these companies have to be accountable to. And I just think there's no planet B. We don't have the option of continuing on the trajectory we're on. So, I think it's got to happen.
And if you wouldn't be running a VC fund, or let's say a group that's going to have different funds, what would be the most impactful thing you would do? What would, in a parallel universe, let's say Trailhead is going, you're not part of that. What would be something? Would you focus on a land fund, maybe in the investment space, or not on a lobby? How would you spend your time if Trailhead wasn't an option?
Yeah, I really can't imagine doing anything else. I absolutely love what I get to do. I feel super, super fortunate to have the opportunity, and my skills and network and subject matter expertise are uniquely suited, particularly for this exact job. So I love it. If I couldn't do it or wasn't able to do it, I think it would be worthwhile spending some time fighting the farm bill or lobbying hard for better policy around food and agriculture in the United States. It is a mess, and we are systematically creating health problems for our population. We're systematically poisoning, the pollinators. We're creating biodiversity collapse. We're like our policy is like systematically drying up our aquifers. By so there's I would probably spend some time trying to lobby or influence policy more.
And in, let's say, the capital approach or the investment approach, are you still, apart from the fact that you really like, let's say, the VC game or the VC work, do you see a role, or what other ways of putting money to work do you think are going to be very impactful over the next, let's say, 5 to 10 years, which is sort of seems to be the window we have? What other ways of putting money to work would you explore if you wouldn't be running the VC side nor the activist side?
I think there's a potentially really interesting private equity roll-up strategy that somebody could do. To your $1 billion question, I think if I had $1 billion, I think there's a really interesting opportunity coming. Maybe not today, but soon, even just within our portfolio, to say we will buy these 3 or 4 companies and combine them into one larger company that can begin to go head to head with some of the oligopoly of existing food and ag industry. So I think that's.
Do you see that happening? Do you see people starting to? I mean, not happening yet, but see people that are even posing that as a potential?
We are, and I think it's like some of these renewable energy companies decided like we're gonna just try to go head to head with the fossil fuel industry, and some of them were acquired and some of them remain independent, and some of them went public, or some of them got private equity money, or got acquisition or roll up, and they scaled. And I think for sure that is a very viable path for food and ag in regenerative supply chain development.
And do you see, because having that idea is not enough, like do you see the potential LPs or investors in those kind of strategies starting to warm up to considering larger tickets or these kind of approaches in the regen space? Because until now, I don't think they have, or they haven't not even looked at. I mean, agtech is one thing. A lot of people burned. Regeneration, I'm not saying the hype is over, but definitely some of the tourists, as you said, left. But in the larger tickets, the PE funds, the infrastructure people, the large institutional players, like, are they starting to be interested at least in let's say, regen food and ag?
Yeah, for sure. I mean, there are a number of folks that are already, Payne Schwartz and S2G, Lucas Walton in Chicago. I mean, they're now moving later stage, looking to write larger checks. I think that there are definitely larger buckets of capital that are like, all right, Trailhead, you go do $1 and $2 million investments at a time, and when something grows big enough for us to put 30 or 50 or $100 million to work, give us a call. So we're getting closer to that day for sure.
Fascinating. And what has gone slower than you expected compared to 3 years ago? We talked about a number of surprises and things that seem to have moved. And what hasn't moved as much as you thought or wished for?
Soil, carbon, and all total farm GHG monitoring. We've looked at all of the companies that are playing in that space, and none of them have progressed as quickly or proficiently as I would have hoped or would have thought. So it's still it's still really you have to physically soil sample to really understand and have very high accuracy and credibility in terms of measuring soil organic matter, soil biology, soil chemistry, soil texture, which is why I continue to be excited about our investment in Trace Genomics, which does just that. But the spectroscopy, the remote sensing, the satellites, the models have not advanced this as quickly or as far as I thought they would. That said, we are looking at two companies right now that I'm very excited about. One that's a laser that actually was developed on the Mars rover with a bunch of funding from NASA. That could be a very interesting addition to farm implements to get real-time accurate soil data. And then we're looking at another company that's been around for a while that's recently made some breakthroughs that kind of on the total farm GHG reporting front. So I'm not giving up on that and continue to think that's a critical piece of the puzzle, but that has happened more slowly than I would have thought.
And anything else, let's say you've looked back at the last 3 years that really stood out of I'm not saying moments that the bubble grew, but definitely let's say the regen space has expanded a lot. Any stories from that or any moments? I mean, maybe when the Rockefellers came on board or something that you really look back at as an interesting moment in time in Trailhead, the Fund 1, of course, but also the general journey.
Yeah. Good question. Yeah, I mean, Rockefeller investing in our fund was a huge deal for us and for the movement. I mean, they've been very active and continue to be with the periodic table of food, I think they call it, and so they've been putting big dollars to work here, not just with us.
You were one of the first, but, I think. They did.
We were toward the beginning, I think, and so let's see. There are, my feeling is that like more and more climate tech generalists are starting to think long and hard about food and ag and in kind of nature-based carbon removal, which requires land management and agriculture. So I think there's. I'm encouraged by kind of that trend. And then, like I said before, I'm really encouraged that there are more kind of ag tech generalist investors that seem to be having more language on their websites and in their materials and in podcasts about regenerative and climate and carbon and biological inputs and thinking about. And Andreesen Horowitz investing in Mark Hyman. I think that's.
We'll look back at that. I think as a moment.
Example.
What do you think?
I hope so. I mean, I think it's incredibly encouraging.
Did you look at it as well?
I mean, we did not. It's a little bit later. It's too big of a round for us. So, he raised $53 million. So our check size would be we wouldn't be able to get the ownership stake that we would want for that. But that's one that we would have loved to invested in the seed round prior to Andreesen Horowitz getting involved. So we're searching for that next one. I think that just that generalist VCs from Sand Hill Road on down coming into food as medicine, I'm super delighted to see that.
Yeah, he's a big part of Common Ground actually as well. You might recognize him from that, and of course, podcast and very present in that space. And you've been very focused, obviously, because you need to focus geography-wise on North America. Any things you've seen outside of that geography that really excites you, interests you, even though you don't have a mandate, maybe? To go there, but in terms of developments, if you followed anything outside of the North America, let's say, bubble.
I was on a call with a really sophisticated, very well-educated family office in Hong Kong last night. There's some very interesting activity happening in Asia. a co-investor with us in one of our deals just is, I don't think it's been announced yet, but is closing a very, very large land purchase in Australia to implement regenerative grazing and take advantage of the more advanced carbon market that they have in Australia. We continue to look at deals and see interesting opportunities in Israel. Obviously, devastating what's happened in that country with the war, but incredibly resilient.
Have you invested at all outside? I mean, in terms of the first fund, the first 27, outside of North America?
We have 2 Canadian companies, 25 US-based companies. We've looked at a bunch of other geographies, but we're in the US for tax purposes and regulatory and legal purposes. It just makes the most sense for us to be focused here, and it's just where so much of the innovation is happening. So we keep an eye on the Brazilian market. We're keeping an eye on the Indian market. Those are 2 huge agriculture opportunities, and so that may be a geographic expansion for Fund 2 or possibly Fund 3, but for the time being, lots and lots to do here in the U.S. and our neighbors to the north up in Canada.
And I don't know if that has changed over the last 3 years, but as a final question, the one that John Kempf likes to ask, and we adjusted slightly. What do you believe to be true about regenerative agriculture that others don't? Let's say you go to RFSI or to one of the where the bubble meets or where the movement meets. Let's say, where are you? I mean, last time very clearly the unicorn. Let's say the exit, the potential of this movement, and there are interesting investment opportunities also purely from a financial point of view. And what would you say now? Maybe it's the same, maybe it's similar, but what do you believe to be true about Regen Ag that others don't? Definitely inspired by John Kempf.
Yeah, John's a great guy. I will say that I think it's the regenerative revolution is inevitable. I think it's going to happen. It's a matter of time. But we cannot continue on our current course. Agriculture contributes 20 to 25% of all global greenhouse gas emissions, and uniquely it can go from source to sink. So that has to happen, and that's through regenerative practices. The leading cause of biodiversity collapse is agriculture and land use. So you cannot stem that tide without changing how we grow food. Water, 70 to 75% of all fresh water on the planet goes to agriculture. So low flow toilets and shower heads do not move the needle. If you're concerned about water, you have to fix how we grow food. Human health, we've already touched on. And then rural livelihoods. I mean, there are something like 1 billion people that are malnourished on this planet that live on, I think, less than 1,000 or 1,200 calories per day. But we grow enough for 3,500 calories of food per person. So we got to figure out how to improve those supply chains, reduce waste, grow food in areas that are currently not viable. So these are just these are human rights issues. This is just improving the plight of humanity and nature. And I don't know. I just feel like we've reached peak insanity in terms of how bad our food is today. And it's the other reason I think it's inevitable is because it's delicious. It's once you've had really good food from really good soil, you don't really want to go back. And we just need to get that opportunity to more people more quickly. And
I knew last questions always lead to more last questions. So here we go. What do you say? Because I think fascinatingly, your Fund 1 also sort of coincides with the rise of the focus, the attention. I haven't seen a lot of results yet, but on really technology solution to all of these issues just mentioned. People saying, let's just get on with precision fermentation and other and cellular ag, etc. And then we rewild the rest, and we'll free up so much land. We'll fix the water biodiversity and climate side of things. It seems like it lost steam a bit, that narrative, which a lot of people invested a lot of money in, and very loudly as well. What do you see there, both from the investor perspective, because for sure people you're talking to for the new fund have been exposed to that, or have been exposed to the narrative, maybe invested in it as well, but also the entrepreneur side. How do you respond to that? I'm not saying techno-optimist, but the food grown in factories and labs to then rewild and fix it, fix the issues you just mentioned, agriculture and food has, that nobody denies, I think, or I hope, in another through another route.
Yeah, I think the pronouncements...
Took us 1 hour and then we go down a deep rabbit hole. There we go. Yeah.
I think the pronouncements of the death of precision fermentation or cellular agriculture are premature. I don't think that has hit the end of the road. I think there's still really interesting technology and innovation to be done there. We invested in O-Meat that they've had troubles along with the rest of the industry. There's a huge regulatory uncertainty, but these things take time. And I still am a believer that there are solutions there where you can. And again, our investment in O-Meat is that all of the ingredients come from cows on pasture. This is a way to amplify the amount of meat coming off of each animal. Therefore, methane savings. Therefore, food or feed and water savings, animal welfare benefits. This could be slaughterless ground beef. So I still am bullish on that space in certain instances, but I also think that there's room. We still are not interested in controlled environment agriculture, for instance. There is life on this planet is because of a couple inches of topsoil and sun and water. And that's really where life comes from. And we can try. Yeah, I don't know. It'll be interesting to see what audacious results show. But my guess is that there's a lot more nutrient density and positive human health benefits from food grown in soil versus hydroponic or aeroponic or under artificial LED lights or things like that. I think I come back to following the wisdom of nature, and bias is still that the reason, while also using human ingenuity to potentially try to improve upon it. But ideally strike that right balance of not trying to trick or fool or outsmart natural processes, because I think that has a long history of having unintended consequences that don't work out well in the long term. So it's I have some dissonance about it. I think we live in dissonant times, and I think it's part of the challenge and the intrigue of our work is to figure out. I don't think we're going back to horse-drawn plows, and but I also am not convinced that we're going to be manufacturing food pellets out of thin air. So something in between, and lots of positive progress to make from our existing system to something that's more regenerative and healing for ecosystems and people.
And how have you changed? Personal question, your own diet or your own eating over the last years, or has that changed with the deep dives you've been on, obviously, through all these companies? Has that change shifted in your family at all, or actually not at all?
Yeah, I've always tried to eat as well as I can. The mission I'm on now is with my kids. You have to be very disciplined to prevent your children from eating processed food and candy and high fructose corn syrup. It's at every birthday party. It's at school. It's it's ubiquitous. So that's the big struggle at our house, or the thing I'm trying to convey to our kids is that doesn't make you feel great, and and it's ultimately not good for your brain development and your growth and your livelihood. So we're white leaf provisions pouches are helping, and we try to source as locally and organic and regenerative as we can. I mean, we live in Denver, so we're in the city, so we're not exactly immediately surrounded by farmland, so we have to be more methodical about it. But and then there are, anytime we go out to eat, we're very much choosing the few restaurants here in town that are sourcing from farms that we know of and love. So it's I mean, I do not have the perfect diet, that's for sure, and I'm conscious of it every time I eat something that I shouldn't or don't particularly want to. But it's a constant daily, multiple times a day reminder of room for improvement for myself and for all of us. And I do. I mean, it's just measurable how much better I feel and sleep and operate when I'm eating really good food. And so that's I'm fully convinced that food can be medicine, and it can be healing and be delicious and build community, and that's why it's such a fun space to work in.
I think it's a perfect way of wrapping up this conversation. I want to thank you so much for coming on here and share the journey over the last years, and of course the journey ahead, but also what you've learned, what you've seen, what you would love to see more of, and all of the above and all of it in between. So thank you so much for coming on here and share in a very busy time. And of course, thank you for the work you do.
Koen, you the man. I really appreciate it. Thanks for having me. And quick plug, if you want to come join Trailhead in our network, we're going to be in New York during Climate Week, the week of September 23rd. So we're holding our annual general meeting on the 24th at Stone Barns, and then some other events in the city surrounding Climate Week. So come find us there. We'd love to meet up.
And they can ping you if they want to know more, I'm guessing.
Please, that'd be great.
Thank you so much, Mark.
Thank you, Koen. Be well.
Thank you so much for listening all the way to the end. For the show notes and links we discussed in this episode, check out our website, investinginregenerativeagriculture.com/posts. If you like this episode, why not share it with a friend or give us a rating on Apple Podcasts? That really helps. Thanks again, and see you next time.